Now, for more on today's market developments, we cross to Nompumelelo Siziba at the Johannesburg Stock Exchange. Good afternoon, Nompumelelo. Over to you.
Thanks very much, Nzinga. Well, global markets are in risk-on mode at the moment. They seem to be ignoring any tensions that are ongoing with North Korea and the United States. And we see the all-share index also in positive territory with financials leading the charge. The local currency is on the back foot, however. That might have something to do with the fact that the dollar is up relative to other currencies. Well, joining me now is my colleague and friend, Gary Boyson. He's from Rand Swiss to give us some analysis on what's happening in the markets. Thank you for joining us, Gary. I nearly forgot your name for a moment there.
We're friends.
Now, markets appear to be dismissing what's happening with North Korea and seem to be more focused on Fed policy announcements later on this week. Your thoughts?
Yeah, so we've obviously got the Nikkei closed today as well for the old folks' day, is what I think they colloquially call it. So maybe, you know, with the missile that was launched over Japan, maybe that having something to do with, I suppose, the lack of concern. But certainly, I mean, you know, a huge week in terms of central bank announcements. So we've got the Fed, which everyone's been waiting for. You know, the expectations around it are very much for no change. But it's going to be very interesting to see, because in the September meeting, traditionally, you get a changing of the forecasts as well. And of course, we're going to see the dot plot, which is the trajectory of future rates. And also, we're going to potentially get an announcement around that unwinding of that $4.5 trillion balance sheet. So there's a lot that's going to happen in the meeting today. And then, of course, we've got our own NBC the day afterwards, but I think that'll play second fiddle to Wednesday's announcement from the Fed.
Indeed it will. But sticking with that, what's your expectation? Many people hoping that we get another interest rate cut come Thursday.
Yeah, so our expectation is for a 25 basis point cut. That's you know, the consensus forecast from the market. It's also what the forward rate agreements are pricing in, but it's certainly it's not a given. So while consensus is pointing that way, there's a lot to play for. So if you look at kind of the models that the South African Reserve Bank uses, and cyclically we should be cutting rates by 25 basis points. There is room to cut rates by 25 basis points. That said, you've got obviously a lot of concern around the currency and the potential impact of a ratings downgrade. So that's a very difficult, I suppose, factor to try and price in. So far the Reserve Bank has been fairly cautious, but I think with you know, the economy clearly suffering from growth, with you know, technically there being room to cut interest rates, I think at some point you've got to say the time for you know, conservativeness is over, and hopefully give us the good news on Thursday.
I made note in my introduction that financial stocks seem to be doing quite well, leading the charge on the all-share index today. But surely, if the market expects rate cuts, that's negative for them. So why do you think they're up today?
Yeah, so it's an interesting dynamic that plays out between interest rates and banks. So, you know, traditionally, what you're referring to is called the endowment theory. So as interest rates increase, so banking profits will increase as well. But there is a cap to that. So as, you know, banks are obviously also very dependent on their non-performing loan books and economic growth. So if you know, interest rates have risen to a point where it's constraining economic growth, or where people are unable to repay their loans, and that's resulting in losses for the banks, it actually becomes a positive for the interest rates to be reduced, and then banking profits will increase. So I think at this stage, like I said, you know, we do have room, in our opinion, for a rate cut, and I think, you know, any sort of stimulus towards growth in South Africa will be very well received. Certainly our banks are very cheap compared to the international peers, and if you do see a little bit of growth coming back into the economy, you know, I think the re-rating in the banking stocks would be expected.
Let's look at Anglo Gold Ashanti. They came out with an announcement on Friday saying that they're looking to close, or to sell, pardon me, their Kopanang mine, which is old and costs lots and lots of money to actually mine. Yeah. So who would buy it? They seem to suggest that there's somebody in the wings. They've signed a memorandum of understanding with another party to buy it. But why would you buy such a thing when it's, you know, so challenging?
Yeah, so I suppose that's what makes a market. There's a price, at a certain price, anything will sell. But yeah, looking at it, I mean, the management, it's not public knowledge who's going to buy the mine. They did say that it would be subject to all the regulatory approvals. I don't know if you can read into that it'll be a big local player that might have competition issues. I don't think so. I think at this stage, you know, the putting Kopanang on care and maintenance would have taken, I think it's about 2,000 250,000 ounces of gold out of the market. They are loss-making ounces anyway, because I mean their all-in sustaining cost is about $2,500 an ounce. So it's very, very high. But while this does, I suppose, give guys hope that perhaps you're not going to see the job losses, that the mine will continue. I'm certain there will still be a restructuring at the mine. They've got to bring down that all-in sustaining cost. But hopefully someone has a better way of managing the asset, and that's the player that will buy it out.
And very lastly and succinctly, all these revelations, KPMG, the downfall of Bell Pottinger and so on and so forth, whilst they're very negative, but they're very good insofar as they create a transparency. Now South Africans can see what's really going on. Do you think this is perhaps good for South Africa in the long run?
Absolutely. Yeah, I think absolutely. I mean, I think the key word you mentioned there was transparency. So, when you can see what's going on, you can fix it. If it's behind closed doors, that's where the real problem is. So it makes me optimistic. Okay.
All right. We're going to leave it there. Thank you so much for your insights. As always, Gary. Well, that was Gary Boyson, Portfolio Manager at Rand Swiss. And I think we hand back to you, Nzinga. Thanks very much.